Thank you. And I think we're MIA one person. So we're going to roll with this. I just WhatsApped him and said, hey, we're starting. So Jean-Francois will hopefully be here shortly to join us. But what was interesting is if for those of you who had joined us earlier for the Future Leaders presentation, we had a good insight into looking at the correspondent banking side of the business and what was happening from their perspective and the information that they looked at. And if you think about over the past few decades, we've seen some dramatic changes in the correspondent banking landscape. And today we're going to discuss the impact of those changes, some of the trends, best practices that have come out of that, and then dive a bit deeper into what we think the future holds. So with that in mind, let's kick it off with our first Slido question, and we'll go ahead and have that come up for you. We'll give it a second to get some responses, hopefully, and then we'll jump into the presentation a little bit. So let's see, nobody's responding. Oh, yes, there we go. Perfect. Awesome. Great. Interesting. And I think that's kind of what we were expecting. We were hoping that nobody would hit the last. There you go. See, there's my 5%, now my 4% that had to come up with the what is correspondent banking. So with that in mind, that we do have some people wondering what we do, that's okay. We're going to jump into the first question about this, and I'm going to see if Jean-Francois, are you on?
Well, yes,
I know you got tied up.
Well, I'm, sorry for the surprise. I feel typically French by coming late. So
you wanted to make an entrance?
just in time.
And just in time. So. Okay. So the first question, and I think this really kind of ties into what we saw in the Featured Leaders presentation, was how has correspondent banking changed during the course of your career? And we would call, some of us would be seasoned veterans, so we've seen a little bit over the past few decades of this. I wanted to just get some insight into your thoughts on it.
Sure. So the first comment I would like to make is that by my whole career, as a transaction banker, it's only 7 years long. So I hope that I will be able to give you some interesting insights despite that. Maybe a few words about the first discoveries that I made when I joined the club. First, it's a club. It's a people business made of professionals. Everybody is friends with each other, and that is the first starting point that I would like to make. It's also a relationship or service provision business. When I came, most of the time during the conversation, expanding the business and so on was not often discussed. Well, the quality of service provided was more discussed at that time. And the other thing that I discovered is that it's a slow but sticky and profitable business with a long selling process. And as you all know, it takes years to get a business at full speed. I had the sentiment that when I joined in 2015, I came at a moment of inflection in the industry where all of us became more aware of the kind of risks embedded in what we do, and also a new awareness about the necessity to close the gaps vis-à-vis the new entrants. Since then, so what to respond to your question, what did happen? I believe that the value of our business has increased. Correspondent banking is an evidence, a testimony of mutual trust. It means that whenever we bank with somebody, it means that I trust you, I trust the that your business is something that is sustainable, run under a consistent risk appetite and risk control framework. And on the opposite, you trust me, you trust my operating model and my capacity to offer you resilience. It's also a good business in the sense that it attracts a deposit, and from a capital consumption, it is something that is viewed as nice. From an HR perspective, and I hope I'm not too long. Please tell me.
You're good.
It's good. Over the recent years, we have seen a kind of renewal of the former generation of transaction bankers, and I remember, the presentation that we had this morning about the necessity to attract and to retain talented people. Obviously, it's our daily life to do so, but at the same time, I feel that over the recent past, we have successfully managed to attract young and talented people because, our business more and more is seen as something that has become trendy, where things are actually happening thanks to technology and so on, and also the sentiment that we are positively contributing to the good transformations of the world. From a project and transformation perspective, what to say? Mm-hmm. Plenty of things in numerous directions. Obviously, we have to cover all the mandatory industry changes, so GPI, ISO, instant payments, and so on. At the same time, it is highly recommended to keep attention to our operating model compliance including. We have also the necessity to pay attention to the modernization of our legacy architecture. In brief, as you can see, plenty of things to cover and that are keeping us extremely busy. So I hope that it wasn't too long, but definitely I had the sentiment to have come at a kind of crossroads. It was extremely stable in the past, mm-hmm. and we have clearly seen a big acceleration in the recent past.
Great, thank you. So Vanessa, as correspondent banking has become more complex, how do we address this and stay competitive? And I would even tie in a little bit about, on that question one, too, about revenue-driven versus relationships and how that all ties into the costs and everything as well.
So ironically, I may have spent longer time in correspondent banking. So I just started when I was 5 years old, just a disclaimer, right? So I've been here in correspondent banking, transaction banking for the last 20 years. And so definitely I think times have changed. When I first joined, just to catch on to a little bit of what Jean-Francois said, when I first joined, I think it was much more straightforward. As a service provider, you offer your clients, and by clients, we're talking about correspondent banking, so bank clients, nostril accounts, clearing service, trade service, trade finance, occasional FX discussions, and then to your point, a lot of the conversation was based on reciprocity from a volume perspective or from a credit line perspective, right? And so very relationship driven. I would say it still is to some extent. However, the world has become a little bit more complex, and I think it's become more complex for a few reasons. One is the breadth of service that one could offer has actually expanded. Right, so recent years, cross-border low value, real-time payment, cross-border real-time, and also a lot of these infrastructures are built on new platforms, new technologies. Connectivity is beyond what we use in terms of SWIFT, right? A lot of these are APIs enabled, so that adds the complexity. The breadth of service adds the complexity. And in addition to the emergence of different rails, you also see the emergence of different services. Right? Umar this morning talked about data service, right? Pre-validation, account validation, fraud prevention. all of these I would call like adjacent or peripheral services that make the payment experience or the correspondent banking experience or the end client experience much better. These are also in the mix. And I would say on top of that, there's also increased regulatory requirements from a KYC, AML, and also resiliency perspective. And last but not least, there's also the geopolitical tension, the polarization that increases, the risk as well as some onus on us as a correspondent bank and the respondent bank, additional onus, right? So my point in saying all of this is that that's the reason why it's become more complex. And frankly, I don't see this going away. So the question is not about getting rid of this. The question is about how do we declutter and how do we make our processes more efficient and take out the friction in this process. I mean, I guess geopolitical, hopefully that will ease up, but there's always going to be conflict somewhere, right? So that's just the world that we live in. And so the question for me is really about not elimination, but like how do we take the friction and make it more efficient? And so I'm not here to solve the problem, because if I'm solving the problem, I probably wouldn't be here. But just a few maybe suggestions I would say. How do we make it a little bit better? One is when I can think about is leverage kind of common infrastructure, right? So we're all banks, financial institutions, and for example, take KYC. We have to do KYC, collect basic information on our clients. Instead of 500 of us here, every one of us doing it one time, we do it 500 times. Why don't we do it one time, and then we can all use the information, right? So I think that's one way to think about how do we increase our efficiency, leverage common utilities. And in addition to KYC, there are probably other use cases as well. For example, fraud database or pre-account validation. These are things that we can come together as an industry and create common utilities and do it once instead of doing it 500 times or 1,000 times, right? So that's one thing. The other thing I can say is digitalization. And that's not because that's my new role, but because I really feel that it's relevant in terms of leveraging new technology, digital technology, to up-tier your interactions with our clients and also with the end clients, right? Moving away from manual, analog interactions into a more digital interaction. And so digitalization is, so I would give example of like digital KYC, digital onboarding. That's what I'm referring to, right? And it's easier said than done, because I always say that, hey, if you just put like a piece of paper on an app or internet, it doesn't mean you digitalize, right? Similarly, there's no point to digitalize a crappy process. Like it has to work from front to back. And so it's not just the front end digitalization, but a lot of times us as banks, we need to look at the back end business processes to make sure that the pipes make sense. But also, a lot of times you have to look into your tech stack, right? So a lot of our technology, it probably requires modernization in order to digitize and to fully obtain the effect of digitalization. But once if you can do that, I think the benefit is great, because it not only takes out the customer friction, it helps your internal process to become much more efficient. And also the use of data is much easier and better, the quality of data. So it really has multiple benefits. And I think using digitalization to ease the pain points and reduce the friction, I think there's a lot to unpack there. And then the last thing I would say is, and I think the future leaders mentioned this, which is the regulator to regulator conversation. Because a lot of times it's not about technology, it's not about business process. A lot of it is the misalignment of regulatory framework, right? And I think that's something that we as banks, I don't think we can advocate for that, but ultimately it's a regulator to regulator conversation, having regulatory alignments and creating common frameworks, and potentially, having certain safe corridors, right, for us to be able to do business. We talked about the exclusion of certain markets. I think that's probably the way we need to think about. So these are just kind of tidbits of what comes to mind.
No, that's great, thank you. And I think that really ties into our next question. You talked a little bit about friction and decluttering and our love of paper and all that we do in banking. So Attia, you were one of the mentors on the Future Leaders presentation right before, and it was kind of shocking seeing that hockey stick, well, the opposite, I should say, going down like this, and of the number of correspondent banks and relationships that have kind of gone away over that time. Have our own levels of bureaucracy within the banking system, stricter government regulations, has that really given the rise to the new players, the fintechs that are trying, and some of the other providers trying to get into this space?
I would say definitely yes, absolutely. If you look into the market, I mean, if you look at the last 5 to 7 years, how many fintechs have come, and a few have gone, of course, but they are still coming up. So I definitely believe that the tighter regulation from the governments and authorities and our own bureaucracy, not to forget our own risk appetite of banks, have definitely given rise to new players to come on the market. I do believe, but that's my personal belief, that they are more successful on the retail side, on the consumer side, opposed to the corporate side. But it doesn't mean they cannot be. I mean, they are, so we have to be very careful that they won't eat our portion of the pie. But yeah, definitely it has given rise to, the Revoluts, the Wises of this world, the PayPals. And to tie into what Jean-Francois and Vanessa said, it's technology, and also what the future leader said. I mean, it's not only a game of technology. We are in a human business. We bank with each other based on trust, and that will never go. And that's actually then a question on, how relevant is reciprocity in correspondent. I think it will remain. But because of the needs of our clients, the playing field, the payment landscape has changed. It will become more revenue driven, and that's what I've seen. I mean, my career, you said 7 years. I think mine is 7 months within correspondent banking, speaking of a longer learning curve. So I'm definitely not there, but what I've learned through the last year and through the Future Leaders class is that the younger generation, but also the economic climate, has forced us to look at different aspects of correspondent banking. Cross-border payments is going to stay, but how we do that business will change in the future. And I think there will be space for multiple players to coexist in the same ecosystem. We just have to find a way how we can work together collaboratively and have a healthy competitive market. Yeah.
So I'm gonna
Go ahead.
add a different perspective, right?
Go ahead.
Sorry. So Aaron, you mentioned that is it because of the regulatory bureaucracy that kind of gave rise to, I think that was your question, right? Gave rise to alternative providers. And so I have a slightly different perspective. I actually think regulation is what we need regulation, right? We're moving monies, we're moving cross-border money. We don't want to facilitate illicit activity. So regulations and having a swim lane, I think that's required. But maybe that was the unintended consequence, meaning that we were so focused on regulation and we kind of lost the overall purpose. We kind of lost sight of our customers and our customers' need. And so the pendulum has swung to one side too far, that we lost about, hey, how is the market evolving? What do our customer needs? And therefore, the alternative providers came in and fill in a gap that we weren't able to fulfill. I think that's how I would look at it. I actually think regulations is required, but it's just like keeping your eyes still on the customer, still on the market, and also their end customer, I think. And
I know my feelings on this issue, but how do you feel about the new entrants into the space and their lack of being regulated
If I may,
as a competitive advantage?
Do you have an hour? Or?
well, I'm not that sure that the day they succeed, the day they're big enough, there should be a kind of convergence between the way they were treated compared to the one that traditional banks are. So, and that is at least, well, the tendency, the trend that we have seen in Europe. I don't know whether in the US it is something that you have seen also, but well, I have some some examples in mind not to be shared, but
Yep. Okay.
I think they should be regulated, right? So regardless of
absolutely,
if you're a technology company or you're a non-bank, right? It's not about who you are, but the activities you do, and we're performing the same activities, and therefore, I think from a framework perspective, there should be more evenness on the framework, right? Yeah.
Great. Great.
Smells and acts like a bank.
Right.
Anyways.
Yeah. No, it's very true.
I think this kind of leads into the next question. And Vanessa, how does correspondent banking, we're talking about being more inclusive of some of the higher risk or emerging markets. How do we take that on in a way that gives them access to the banking system around the world? And this is like, we could again talk on this for hours, but that makes us competitive in a space over those fintechs or other entities.
Yeah, so it's not an easy question, right? So by when we say emerging markets, we're really referring to high risk jurisdictions, and I guess from a bank perspective, there are two considerations. One is there's always a commercial consideration, and then there's always a risk appetite problem, and so I think most banks could get over the commercial consideration. So, for example, if you digitize, you make your process more efficient, you do use common utility, I think you can get the cost of due diligence, cost of providing services down in the ultimate stage. And so you can, or you charge more money, right? So either way, like you can, the commercial decision or the consideration, I think you can overcome. I think the risk appetite is really where the crux of the issue is. And I think, again, like, it's about jurisdictions that have kind of weaker risk frameworks, more illicit activity. I think it really requires regulators talking to each other and creating that common regulatory framework and potentially, creating a safe corridor. Otherwise, I don't think banks, again, different risk appetites, but by and large, I don't think it's somewhere that we'd want to necessarily be able to service. That's my view.
Any others? Comments?
No, well, I think it was extremely comprehensive. Not for me.
No. I think that's the second time we've heard the comment about regulators talking to each other, and that's a hope that you could do that, but our governments aren't always great at talking with each other. Right now we're going to put up the second Slido question for you, and that is, what is the biggest pain point in correspondent banking? So we'll give you all a second to respond to that before we dive into kind of our last section. And okay, yeah, well,
wow.
That could be one person that answered it, a quick trigger figure there, but yeah, I think everybody has that same feeling that the KYC AML is really a huge pain point, and I think as we look at this, how do we get to that good place? So Jean-Francois, in your view, how do we get to the good place? Like, what's beyond where we are now, and what does the future of correspondent banking look like? Where to get to where it's less KYC. Well, there's always going to be KYC, a more effective way of doing KYC. So to move us forward.
So to answer your question, maybe the first comment that I would like to make is that there is no one-fits-all answer. There's plenty of answers. It depends on the kind of player you are. It depends on the kind of ambitions that you have. It depends on the market knowledge that you have. It depends also on the risk appetite that you have set. That provided, we all know that we have a kind of global and clear guidance about what to do. I believe that we're asked to build a frictionless and more inclusive correspondent banking world or a cross-border payment world. We have had the occasion to speak about the 3 reports issued by the FSB/CPMI/G20, upon which you have, as a kind of umbrella, the 3 P principles, which are people, which are planet, and prosperity, which is extremely consistent also with all our ESG ambitions or objectives. When we speak about inclusion and inclusion in payments, in my view, we're speaking about 2 things. First of all, offer to our respondents the means to serve well all their clients, including the weakest ones. And 2, which is maybe more common, and in my view, it's probably where you are expecting me for this question. How do you manage your relationship with banks located in compliance-exposed jurisdictions? And how do you make it so to let them connected to the financial system? So for the first piece that is important, I believe that it's mainly a matter of costs. And coming back to you, Vanessa, I was surprised by the outcome of the poll. Obviously, KYC, AML are things of extreme importance, but being able to decrease our cost through a good operating models, making all the efforts to streamline that, I think it is extremely important to remain relevant in that market and to be in a position to offer to our respondents the prices they need to remain relevant in their domestic market, especially against new entrants. And obviously, it's an industry with big fixed costs. And if we want to survive in such an industry, we need to get as much volumes as possible to squeeze or to divide as largely as possible this fixed cost base. On the de-risking or demarketing side, I would say that the wise behavior is to manage that in a very, or as much as possible, in a responsible manner. The idea being to avoid exaggerated de-risking decisions. It means that to make it so, we, as a correspondent bank, we need to extremely precisely design our risk appetite framework and obviously respect it and execute it. We have also, KYC. We are all speaking about KYC. It's very often described as a kind of burden, but in essence, it has also to be seen as a useful exercise, not only a tick-the-box exercise, because it is our interest and mutual interest to have a deep understanding of the nature of the relationship that we're about to establish. I think it is important to make the right decision in terms of client selection, because even for an exposed country, I believe that from time to time you may have the good surprise to encounter serious people, serious banks, having a sound compliance setup and banking with serious clients or delivering serious activities. So the selection process is, in my view, of first important. And afterwards, and that is not the easiest piece of the journey, be able to detect the possible deviations between what you are expecting and what you actually receive. The other secret is to, it's like in life, you know, communicate, being frank and transparent. I think it is good, necessary to have vis-à-vis your respondents to expose mutually your expectations and to be extremely clear since the beginning. Be clear also about the economic equation of what we do. Whenever we are dealing with a bank, you know, in such a country, we are likely to bear more compliance costs or to perform more compliance duties, which means more compliance costs. And at the end of the day, it is something that needs to be reflected. And last but not least, I would like to end by that. You know, it's like in life, again. You know, business is made of rights, but also duties. And especially for sizable banks, I believe that we have a duty to make our respondents as well trained as possible. And in that sense, the BAFT Respondent Playbook, at least, or it's true in our institution, but I believe it is the case in others, is a good way, a good tool to perform that. So to answer your question, you know, as a conclusion, I would say that being more inclusive and less onerous at the same time, yes, it's possible at the condition of being good, you know, at these two angles, I would say. The path is narrow, but I think there is a path.
Great, thank you. Would you like Attia or Vanessa comments?
Yeah, so, no, I think that was very comprehensive,
Elaborate,
very philosophical. But just, I'll be very brief on this, right? So what could we, like, what does good look like? What could we do better? I actually really feel that a lot of the processes, as I said earlier, it's necessary, but it's about the how you do it. And I think the how you do has a lot of opportunities in terms of taking out inefficiencies, right? So going back, again, you know, everyone does KYC, going back and forth with their clients, you know, emailing, and it's just, there's a lot of, there are newer technologies and newer ways of plumbing that could be used to make the process much more seamless. And instead of asking, like, I often hear our clients saying that, you know, well, why do you keep asking this information? You already have this information, right? And why do you keep asking it again and again? And the reason for that is that, you know, our databases don't necessarily talk to each other, and one part of the bank doesn't know the other part of the bank would have that information, right? So I think there's a lot that we can do with, like, taking out the inefficiency and using digital as an enabler to make that process much more painless, you know, for our customers and also for ourselves, for our internal employees, to make it more efficient. So that's the one that I would kind of focus on.
Great.
Yeah, maybe a different angle on it, because I think KYC and AML compliance, you know, a lot have been said about it. But you can also at the same time not deny the existence of all these new players and all the different needs that different regions and different banks have. I think throughout the research and my own career, I've seen that, you know, there is, like from where I see it, there will be multiple players serving their own markets, serving their own niche clients. I think the key question is the interoperability of these various platforms, you know. How can we create a system where everyone can coexist and serve their own markets and regions? Obviously, keeping in mind the AML and the compliance, that's a given, we have to adhere to that. But how can we make a technology talk to each other? And there was this very interesting analogy, Vanessa, that you gave yesterday. So there's the four of us coming from 4 different regions. One uses WeChat, one uses WhatsApp, and Aaron, I don't know where you come from, but he didn't know how to use WhatsApp.
I don't use it very often.
So,
I use the iPhone app.
Yeah.
So I've been indoctrinated. So.
Yeah, 2023, WhatsApp.
I know.
But wouldn't it be great if these different communication tools would be talking to each other so we don't have to maintain different accounts? I mean, I think that's the analogy that we use towards correspondent banking as well. You know, you have Buna, you have P27, you have Finality. Correspondent banking based on SWIFT will still exist. You know, it's not going to go away. But I think these different multilateral platforms or hubs or tech companies will serve their own portion of the market. And I think the success will be in the future when they can talk to each other and serve a wider audience. I think that's from how I see it.
But I want to, sorry.
I could see you're ready.
I want to add to that, right? So really it's the emergence of new platforms, new rails, and I actually think that makes correspondent banking even more valuable because, you know, as a correspondent banking provider, right, the question that we ask ourselves is, how do we navigate this and help our clients weave together a solution, you know, like picking solution from a non-bank provider or going into a particular platform and weave all of this together. And in fact, that actually makes this all so much more interesting and more valuable because it does become very complex. And you know, so the interoperability is something, right? But without interoperability, I think some of the correspondent banks play that role of bringing everything together and providing solutions to our clients.
Great.
Right. I agree with you. You know, in the past, there was a system based upon SWIFT, and the correspondent banking technique was I would say, universal, unique, and you know, for the future, I agree with you, Vanessa. The world has become more fragmented, more complex, and I perceive our role as well, handling this complexity, managing it, hiding it, and making well, this complexity simple for our respondents. What is your need in terms of speed, of price, of reach, and I will do the rest, you see.
Great. Well, we do have some time for a couple questions, and I see the top one is touching back to the future leaders graph that showed the trend for increased concentration in correspondent banking relationships. Does this trend present a risk to the model?
Maybe I can start, and I will let you complete. I would tend to say yes and no. I would be curious to see what is behind these figures, because we have seen a concentration trend in this industry. There is also a question about reciprocity. In the past, it was extremely trendy to bank with plenty of banks, and nowadays, for plenty of reasons, it has become costly, inefficient to do so. And because of that also, I believe that it has triggered a decrease in the number of correspondent banking relationships. So we could see this evolution, sadly, by considering that some relationships have been terminated for compliance reasons. But on the opposite, these figures could reveal a mechanism of optimization coming from the respondent. So,
right, and I will get on my regional bank soapbox for a moment, because I think this really impacts a lot of the regionals here and around the world as well. As we see the concentration going to the large correspondent banks, if they choose not to bank with regionals in certain parts of the world, you are cutting them off from markets. So I think that is going to be a detriment. And that may be where a Visa or somebody steps in and takes the business away from all the larger banks by offering a different network at some point outside of that. So that's just, you know, from one of the banks that's towards the bottom tier of the correspondent network.
Yeah, I don't know if I agree with that, sorry, but so I guess it's the unintended consequences, right? And so I mentioned about risk appetite, and it's the unintended consequence that unfortunately certain markets or jurisdictions are just, they don't have access to the financial system. But I just, so by those flows going outside of the system, I don't know if that's safer, right? I mean,
No.
it still exists,
No,
right?
yeah.
It's not safer, so it's just you shift the problem elsewhere. And so I think fundamentally it's the regulatory alignment. I feel like a broken record, sorry. But I think that's where the crux of the issue is, right? Because you shift to alternative providers, it still doesn't, and in fact, it's probably even more dangerous when it's outside of the system and you don't have visibility.
Well, we're in the red now
Yeah.
officially here.
There was this interesting question, Aaron, if I may,
Sure.
which disappeared now, but it was on the bottom about whose responsibility is it to create an inclusive correspondent banking? Oh, there it is. Does it lie with regulators, global banks, or independent entities such as BAFT or IMF? Again, from where I see it, it's all of the above. It cannot be a responsibility of just one entity. I'm coming back to, we have to create this collaborative ecosystem where regulators talk to each other, associations like BAFT and IMF and global banks, regional banks talk to each other to create that inclusive, financially inclusive model where everybody can play a part. I do think it's a long journey still that we have to go. And at the same time, I believe because the fact that it was a topic this year to be explored by the future leaders, it's a problem that exists today, and they have made a really, really true attempt to address that, but it will need a couple of more future leaders to, take it further. So that's a call for action to Todd, I guess. But yeah, I think it's our own responsibility. Everyone here is part of a regional, global, or a bank, and we have to play our part to make it a safe and an inclusive financial world to be in.
Great, thank you. And before they start playing us off, wanted to thank you all for participating in this presentation and thank the audience. Thanks.
Thank you.